Hi Mrs. Annie and other lecturers who might be watching this video. I'm Ying and
I'm Zach
from Class 02, and this video is for our Business Accounting CA2 project.
On the 1st of March 2020, it was said that the business received 3 months worth of rental by check, and amount received was 4,200. To record this transaction, the cash account is debited by 4,200 as there was an input of cash received from the payment, whereas the unearned rental revenue account is credited by 4,200 as amount received has not been earned, making it a liability to the business.
On the same day, it was also said that the business paid for 15 months worth of insurance amounting to $3,000 in advance. To record this transaction, the prepaid insurance account was debited by $3,000 as expense paid in advance is an asset for the business, whereas the cash account was credited by $3,000 due to output of cash for the payment.
On the 22nd of March 2020, it was also stated that the business bought office equipment worth $62,000 and paid deposit of $37,200 upfront. To record this transaction, the office equipment account was debited by $62,000 as office equipment bought by the business is an asset, while the accounts payable scheme is credited as amount owing is a liability to the business. To record a deposit made upfront, accounts payable scheme is debited by $37,200 as payment on amount owing decreases amount owed, whereas the cash account is credited by $37,200, being cash paid is an output of cash for the business. One accounting concept used was the accounting period concept. Statements of profit and loss as well as financial positions were prepared based on transactions from the period of 1st March to 31st March 2020, clearly showing the application of the accounting period concept, which states that lifespans of businesses are broken into regular intervals with financial statements prepared at the end of each period. Purpose of which was to prepare the relevant statements for potential investors and creditors for comparison.
Another accounting concept used was the accrual concept. The concept states that expenses incurred are recorded despite no cash being paid out yet, and revenue is recorded when it is earned, regardless of when cash is received.
Examples of this would be from source documents on the 15th of March, where expenses incurred from salaries was to be recorded despite cash being paid out at a later date. And on the 16th of March, where business sold goods on credit and revenue was recorded despite no cash received yet.
Firstly, this application has a user-friendly interface which makes it easy to navigate to get the required information as headers are provided. Easy Setup Assistant is also available in the application, and it contains step-by-step tutorials for new users to understand how to use the application easily. If you wish to set up accounts for your company, all you have to do is to follow these simple steps. Start off by selecting the Easy Setup Assistant, which will redirect you to a list of many possible accounts your company might have. After which, select or create the accounts needed. Finally, select the correct account type and key in the opening balances and names of each account. Ta-da! You're done setting up your accounts. Now, you can select the next button and check if your opening balances and names are correct. You can go to the accounts list to view all your accounts and the current balances in those accounts. There are also headings for the different account types, so you can look for a specific account with greater ease. Secondly, all transactions recorded are automatically saved into the company file and will not be lost unless deleted personally by the accountants. So, statements and journal entries recorded at any accounting period can be accessed readily, and companies can use the information whenever they are needed. To access the journal entries, simply press the Transaction Journal button. Doing so will lead you to the page at which you can view all transactions of any time period, as well as edit them should you require to do so by clicking at the arrow to the left. Amazing, isn't it? Lastly, the application automatically prepares financial statements according to the journal entries recorded. This helps businesses be more efficient as it automates the process of creating financial statements. This also reduces human error that accountants might make in the process of preparing these statements. To access financial statements, simply click on the Reports button that can be found on the home page. Doing so will lead you to a list of all statements relevant to the business, of which you can choose whichever you need. For example, should you need the company's trial balance, simply click on it from the list and boom, you have it ready and available. You can even view statements from other periods by simply inputting the time period of your choice. Isn't that astonishing? One area that can be improved will be the security of business files. As of now, the company file does not require any passwords or two-way authentication to be opened. So, the information can be accessed and even changed easily by any external parties as long as they are in possession of the device in which the information is stored. This means that information that are crucial towards the business are left vulnerable, which can be detrimental on a business as confidential business information can be used to commit illegal acts like fraud in the wrong hands and may even lead to the loss of business and clients.
Another area that can be improved will be the inability to co-edit. This application only allows the editing of information to be done on a single device, so editing cannot be done simultaneously by different accountants. This meant that should the device malfunction and all data is lost, there will be no other way to recover the data, which can cause the business to face problems such as the inability to prepare and present the financial statements quickly and accurately.
Another possible improvement to the software would be the informing of unbalanced debits and credits to the user before any further actions are made. When recording journal entries, we notice that the application just takes any value keyed in by the user. Even when the values entered by the user do not add up, the system cannot detect the mistake yet.
As a result, if the user makes any mistakes while recording the journal entries, he or she will only realize the mistake until the very end, when statements are prepared, where values for all assets, liabilities, and shareholders' equities are unbalanced, which can be bad for the business as this will result in inaccurate financial statements that will not only affect the business but also external stakeholders.
Thank you for watching this video. Goodbye!